But once it busts down below or breaks through above, then you can get what's called a breakout, a momentum breakout. Volume builds up, you see it go, and now buyers buy until we find another resistance level.
Bear gang till I die, ho. Swooped up the homies and we about to start a sideshow.
It's very simple. This is just the volume. Green means it went up. Red means it went down on everything. On the candles and on the volume. The higher these bars, the more shares were traded, bought and sold during that time frame. And in these, this just lets you know the bottom of it is what the price of the share was at the beginning of that minute, 5 minute, whatever time frame it is, and at the end of that time frame, how much it was worth. So if it's green, how much it was worth, how much it was at the end of that minute. Red, how much it was worth at the top is where it started, and this is where it ended on the downside. So it just lets you know if the stock went up in value or down in value and what it started at and finished at. These two lines are just what's called moving averages. So this yellow line just takes the last 25 of these candles, or 20 candles, and tells you the direction based on those candles it's moving. The red one takes the last 50 candles and tells you the direction. And what that tells me is when it crosses, when the short term crosses over the long term, it means we're looking at a lot of selling, right? So the momentum is selling. So it means that the most likely going down. And then when it crosses on the upside, that lets me know that we're getting momentum for the buying, right? And that's kind of where we're at. Like right here, you see how we're about to cross the yellow above the orange? That's letting me know that there's momentum on the buy side. That means that there's people buying the shares at the price they're at, and it should increase the price. However, you also have to pay attention to the volume, right? You want to make sure there's a lot of people changing shares because you want to make sure that a lot of people are interested in buying and selling and driving that price up, and not just one or two people, because then it's like, well, you never know. But what you're looking at here is it is just telling you this is where the price began, and this is where it ended, right? If this is where the price of the equity ended at that minute, and this is where the beginning was right here, this little line just lets you know the lowest it traded. So it fell during that minute. The value of it fell all the way there. But by the end of that minute, this is where the price settled. Same thing here. So it opened up here at 24.80. It closed at 24.85. But at one point, it was trading as high as 25.18. So that's what that just gives you an idea, the idea of how much it fluctuated in value during that time. But where it settled is where the thick color is. If you see a lot of these tall wicks, it kind of shows that there's a lot of selling going on, right? Which kind of generally shows you that there's selling going on, which means the momentum could be pushed this way. And if you see a lot of the wicks on the bottom, it shows that there's been a lot of buying, okay? And it can generally give you an idea that there's some buyers interested and we might be moving up in direction. Not a guarantee, but just an indicator, and that's why they're called indicators. So notice how we're getting a lot of wicks to the top side, right? Top side showing sell, top side showing sell. Now we're getting top side, half, but still top side. This would indicate that we're starting to slide a bit. Support, resistance. Okay, there's two different types of ways of looking at support and resistance. You can look at it intraday. You can look at it on a yearly chart. There's several ways of looking at resistance, right, and support. Okay, so on an intraday, let's look at plug for example, right? So each candle, okay. Okay, so when you see each candle, right, this is the buy and the selling candles. Okay, notice how every time it got to $22, it got there and then it bounced off of that line, right? And then it got down to 22 again and it bounced off. It got down to 22 again and bounced off. What that's telling you is that there's a lot of buying happening at a specific level, right? Why is it at that exact same level we're seeing it move up? Because that's a support level, right? There is obviously buying happening at the exact same level. If the candles were doing this, okay, that's not showing a support level. But we're seeing every time it gets to 22, it reverses because that's where buyers are sitting, okay? So if it continues to bounce off that, that's where we're at. So we've already had 1, 2 bounces, If it happens a third time, if it happens 3 times, I consider that, and that's just me personally, intraday support. That's where our support level is, and unless we break down below it, that's where it's going to continue to bounce off of, and usually on the third time, we'll see an explosion, especially with consolidation. Support is the other way, or resistance is the other way, right? So that's support. Resistance would be every time it gets here, it bounces off. That means that's where the sellers are. Let's say this was $25, right? If every time it gets to 25, it kind of hangs there and bounces down and then goes up and hits off, that's a resistance. So that's where your resistance level is. And what you're looking for is a breakout, okay? You want to see volume build up, and you want to see it bust through or break down. And if it does, that causes a momentum, okay? That gives people who were like, I don't want to buy it because it's at that resistance level, even though I'm bullish on it, I'll wait. If it breaks through, oftentimes, especially if there's good volume, we'll see it explode up or explode down once it breaks that, because that's, you've already told everybody, hey, this is where it's falling from, or this is where it's bouncing up from, you're solid. But once it busts down below or breaks through above, then you can get what's called a breakout, a momentum breakout. Volume builds up, you see it go, and now buyers who were like, you know what? I want to buy this, but I want to make sure that there's a lot of other buyers out there. I want to see a bullish sentiment. You break above that resistance, we don't have another defined resistance. So now it's buy until we find another resistance level. And rinse and repeat. And same thing on the downside, okay? That's for intraday support resistance. When you're looking at something in the long term, like a yearly chart, a monthly chart, a 5-year chart, you'll see something that goes like this. Okay, same kind of thing. Let's say this is $22. Okay, you're noticing that at $22 we tend to see that. And then if this right here
break down at home,
let's say that's $30. On the upside, that shows we have a $30 resistance level at the top, right? It doesn't necessarily mean that that's always going to stay the same. It's just when you're trading, you're looking for patterns, and that's a pattern, right? It's not a guarantee. It doesn't mean, oh shit, if it gets to $30, I better sell. It might go to 40, but it's letting you know that based on historical precedents, every time it got to 30, it stayed there before coming back down, and it got there again and came back down. So if you're trading off of patterns, you'll say, you know what? I'm going to buy this at 22 and I'm going to sell it when it hits 30. We did this with Stitchfix. We found a channel between $33 and $35, I think it was, or 21 and 20, $23, $25, and it stayed in that channel forever. And it came down, and then guess what? It came down, bounced off, went up, it broke through, and then ran 25%.